Hello, dear viewers. Hope you all are doing well. Welcome to Revision Time. In our previous videos, we have studied about classification of accounts, recorded those accounts in our journal entries, and then posted them in our ledger books. Today, in this video, we will be studying about a new topic, subsidiary books. So, what are the subsidiary books? Now, when the business is small, all the transactions you will record in a single book under one book, that is known as journal. But as the business expands, when the business is becoming big, all the transactions will be large. There will be more number of transactions. So in that case, it will be difficult to maintain all the transactions under one book. To avoid this difficulty, there are different kinds of subsidiary books. Let us study about those books in our today's video. Different kinds of subsidiary books are: first one is cash book, second is purchase book, third purchase written book, sales book, sales written book, and lastly journal proper book. So these are different kinds of subsidiary books. These are also known as special journals or day books or subsidiary books. Let us understand the role and the transactions which are to be recorded in these books one by one. Now let us understand what kind of transactions are to be recorded in these types of books. First one, cash book. All kinds of cash related transactions. All kinds of cash related transactions are recorded in these books, like goods purchased for cash, capital introduced, cash paid for salary, received from the debtors, creditors paid, all kinds of transactions which are related to cash, in which the cash is considered, are to be recorded under these books. Next we have is purchase book. So, in case you are purchasing goods by paying cash, it is normally under the cash book because cash is considered here. Cash is coming into consideration. But when you are purchasing the goods on credit and promising to pay them in the future date, all kinds of credit purchases are recorded under this book, that is purchase book. Next, sales book. Similarly, when you are making credit sales and the customer is not paying you immediately and promising to pay you in the future, when you are not receiving any cash for the sales made, in case if you are receiving the cash, it is again under the cash book. It is reflected in the cash book, but all the credit sales are reflected in our credit sales book. Next we have purchase written book and sales written book, which are similar for all the transactions like purchase written. Whatever goods we are purchasing due to damage or excess quantity, wrong product, all those products are to be written back. All such purchase written are recorded in the purchase written book. Similarly, sales written, we are getting written from our customers for any such reasons, then it is recorded in our purchase written book and sales written book. Next we have journal proper. There are various again transactions which are not affected under all these four books. All such transactions are to be recorded in journal proper. It may be discount allowed, depreciation accounts which are not considered in our cash book, purchase book, sales written and purchase written book. All such transactions are to be considered in journal proper. Today we will be mainly looking only into sales book, and these all other books we will be taking up into our next video. This first we are studying about cash book. Let us see what transactions are recorded in this cash book. First, inflow and outflow of cash. Second, we know that cash account is a real account. What are the rules of this real account? Debit what comes in and credit what goes out. With this rule, it becomes that inflows of cash are debited and outflows are credited, because debit what comes in and credit what goes out. Next, it is types of cash book. Types of cash book. First we have is single column cash book. In this book we have only one column, that is cash column. Next we have is double column cash book. We have three types again, where there will be two columns. One is of cash and discount. Second is of bank and discount. Third will be cash and bank columns. Next, triple column cash book. In this we have three columns, that will be cash, bank and discount. At last, it will be petty cash book. In this book we record all the petty cash expenses. Petty cash expenses means small expenses, small cash expenses. So in our today's video we will be studying about single column cash book. We will be looking into double column cash book with cash and bank account. Cash and discount and cash and bank and discount is not under our syllabus, and triple column cash book is also not covered under our syllabus. So we will be looking into single column cash book, that is with cash column, and double column cash account with cash and bank account, and petty cash book with small expenses. So for a quick revision, cash book. So cash book is a book which all the transactions related to cash receipts and cash payments are recorded. So in short, inflow and outflow of cash transactions are recorded in our cash book. Next, cash records inflow and outflow of cash. Yes, cash book helps in effective cash management, as management can know the balances of cash and bank and take the necessary decisions accordingly. So cash book is a real account. We know the rules of real account: debit what comes in and credit what goes out. So cash book is our real account. Next, we looked into different types of cash book. Single column cash book, we have only one column of cash. Double column cash book, we have again here three types: cash and discount column, bank and discount column, and bank and cash column. Next, triple column cash book, there are three columns in this cash book, that is bank column, cash column and discount column. At last, we have petty cash book. In this cash book we record all the small transactions, I mean small expenses, small cash expenses transaction. Petty means small expenses. So here next we have format of cash book. We will first look into the format of single column cash book. We have the name of the account at the top and date, receipts means particulars, ledger folio and amount, that is cash amount on the debit side. Same columns over our credit side too, that is date, and here we record payments, because debit what comes in all the debit side we record receipts, inflow, and credit what goes out is our payments. So all the credit side we record our payments, and ledger folio and amount. So let us consider a few of transactions and record in our cash single column cash book. So now let us quickly read out these transactions and post them in our single column cash book. Enter the following transactions in simple cash book for December 22. So on December 1, cash in hand rupees 12,000. December 5, cash received from Banu 4,000. December 7, paid rent 2000. December 10, purchased goods from Murari for cash 6000. 15th December, sold goods for cash 9000. 18th, purchased stationery 3000. 22, cash paid to Rahul on account 2000. Paid salary 1000. Paid rent 500. So let us start recording these transactions in our single column cash book. We know that all the receipt sides we have to, debit side we have to write entries as to, and by credit side we have to write entries as by. So our first entry on December 1, cash in hand, which is to, balance brought down. Cash in hand is to be written as to, balance brought down for 12,000 rupees. Next we have cash purchased, cash received from Banu 4,000 rupees on December 5 to Banu's account 4,000. Paid rent on December 7 by rent account 2,000. Purchased goods from Murari for cash 6,000. December 10 by purchases 6,000. Sold goods to cash, sold goods, it is a receipt, the money comes in, cash comes in on December 15th to sales account. Purchase stationery again December 18th by stationery rupees 300. Cash paid to Rahul on account 2,000. Paid, it is a payment, so December 22 by Rahul account rupees 2,000. Next we have paid salary, again a payment on December 28th by salary 1,000. And again December 30th paid rent rupees 500. Now let us total our cash book. Here the total, we have to write the total under the same line, total of debit side and total of credit side. Here the total is 25,000 and here the total will be 11,800. So here there is difference in total. So on December 30th we will balance this as by balance carried down. Difference we have to write as by balance carried down. So here 25,000 is the total and 25,000 is the total. Out of 25,000 receipts inflow we are paying, the outflow is 11,800, so our balance is 13,200. This is our single column cash book. And this is the balance of our cash book. This is how we have to record all the receipts and payments and find out the balance of the account. So this is it for the single column cash book. In our next video, we will be studying about double column cash book, in which columns will be bank account and cash account. Stay tuned for our next video. If you find our videos informative, please subscribe to our channel, like our video and share our videos with your classmates and friends. Signing off for the day. Happy learning.